to my morning report chart analysis videos on Monday the 19th of March with me, Richard Perry, market analyst at Hantec Markets. We've got an interesting move on the markets today. Sterling has jumped quite significantly on the back of news that there's been an agreement in the transition deal negotiations between the EU and the UK, and no details yet as to exactly what the breakdown of that transition deal is. However, sterling has jumped significantly, about 100 pips higher on the day now. But generally speaking, we've had sort of moves on the dollar, which have sort of held up actually, rallied into Friday, and early this morning was up, but it's just unwound a bit as the euro sort of regained a bit of sort of ground that it had been losing a bit early morning today. And sort of there's been a slight sort of shuffling around in safe haven positioning this morning. You can see that on the board here, whereby we've had the yen, which was stronger against the dollar early morning. That was way down in the 105s earlier, but it's now rallied again, and it's back above 106 again. And but you can see that through the equity markets, we're still running a pretty negative consideration there. And that, I think, is generally sort of protectionist theme based, as was the theme throughout last week, but also sort of concern perhaps in front of the Fed this week, which may well be sort of ready to sort of position on a more hawkish basis. I'll talk about that as the week goes on. But yeah, that's could be one of the reasons why equity markets is starting to sort of fall back again, and it really is big question marks surrounding this the equity market recovery in Europe, whereas the S&P 500 is far more sort of developed in its rebound, following on from that sharp February downside move. The FTSE 100, for example, is way down on that recovery. But anyway, and you do have these treasury yields which have picked up again, as I said, again in sort of a little bit of sort of a nod towards the Fed on Wednesday, I think, which is sort of, as I said, positioning potentially for a more hawkish move. You can see that 2-year yield above 2.3%. That's multi-year highs, I think, back to 2008. The 10-year is the 10-year is lagging that sort of breakout, but still sort of up today, which had earlier helped the dollar to the down, sort of, which is sort of pulling the dollar higher, but it's just back a little bit now. And yeah, it's interesting moves that we're seeing today. So in terms of data points, there aren't any today. This is a very quiet day in terms of economic data. The G20 meeting is getting underway today, and it'll be interesting to see how the other countries react to the protectionist sort of trend of the US moves in recent weeks, certainly with the trade tariffs. That will be interesting. But yeah, generally speaking, that is the only real bit of news flow or data to be coming out today, aside from obviously what we've had this morning, which is this news from the EU and UK on the transition deal. Now, my chart today is silver. Now, silver was beginning to again position for a downside move with the dollar strengthening. We saw that the silver price closed at the lowest level since December, as this sort of range threatens to break down. Now, 16.16 is the low of this range, as you can see here. Bounced from 16.20 on Friday, and again this morning, 16.20. Before, as I said, the dollar has just started to unwind those gains a little bit, and certainly that has helped silver to rally. But you can see this downtrend formation within this range. You see the momentum indicators ticking lower. Look at those stochastics accelerating lower. RSI is still above 40. Interesting. Well, although earlier on this morning it was below 40, it is hanging on to 40. But I think what you'd say is the RSI, if that started to close below 40, is that an early warning signal? Would these MACD lines here beginning to accelerate lower, would that also be an early warning signal of a breakdown? Now, what you do have is it's about 80 cents worth of range. So if you get a closing breach of 16.16, you're sort of, well, you're definitely coming back towards testing this 15.59 level. So that's of the December low. So that would be the inference of that move. But certainly at the moment we've got this sort of manoeuvring to the downside. 1635 has been a bit of a pivot floor, isn't it? Previously, and breaking down on Friday, and then becoming the basis of resistance this morning. So that would suggest that's a selling area. 1635 up towards sort of 1645, so I'd say a 10 cents worth of sell zone is pretty decent around there. And then 1649 is around about where that downtrend comes in now as well. So yeah, you've got a chance for selling into strength in the silver price, I think, because it certainly looks like if this range continues the way it is, with this sort of build up of negative candles, that we could be set for a downside break. The Fed could well have a big say in the direction of that move. So I wish you good luck in your trading today, and I will speak to you later.